Dun, 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 dun. Mic check. 1, 2. Going live in 3, 2, 1. Let's go. Let me know if the music is too loud. I see there's 3 of us, so yeah, I can begin. So my whole thing is waiting for the 12 p.m. candle. So that is 12 p.m. in Nairobi time. That would be GC plus 3, right? That would be the 11 p.m. candle, right? And that is usually my focus, because there's too much in this market. So by me choosing to just trade that one candle, it has reduced my work so much. So let me know if the music is too loud in the charts. So one has left, it's only 2 of us, so good. So I can start my analysis. So what I do is I'll start on the monthly time frame to see where we are. So this is this month's candle, right? So this is 20 days of trading. Now, by what I'm saying, we are likely to trade up to here, and but that's on a monthly perspective. So I do have some levels. All right, I'm by myself now. Okay, I'll just keep on going. So these are the levels I have. So for now, this is what we are working with. I do think we are going to get to this level. How I got that level was, it's the half of this up candle over here. So the reason why I think the half of this candle is important, because there's something called a propulsion order block, or yeah. So we should likely see price being kept below half of that, right? Because this is an up candle that traded to another up candle, and then we saw some reaction going to the downside, and now I'll be anticipating to see what we will do around this level. I don't know if we'll get there today, 45 points, but I think that's it. Let me know if the music is too loud on the charts. If you're able to say something. So let's go to the daily. Let me see what levels I have. Okay, let me see if I had anything marked up. Yep. So currently we are in this, see this space over here where this candle is not touching that candle. So that is something called an inefficiency, where price will come back and try to fill those holes. Another one we have is here, right? So this is currently where we are working right now, and it's a nice place also to try to look for a retracement. But if you're so strong, then I'm looking to this level. This is why so this level has another confluence. We can see there's another gap in there that's adding some more, what do I say, some more meat. So that's also an attractive level. And we have a few minutes. We have like 24 minutes left. So I do like that, whatever, that inefficiency. Although this one is balanced because we traded up and we've traded down. So the only reason I'll have it is because of that half, whatever, that level that I have there, right? And blue, and I'll just name it, that's a daily imbalance. And oh, awesome, Vic says it's good for me. Amazing. Okay, so what I'm doing right now is I'm looking for levels which I think the market is gonna trade to. It might reverse from those levels, and they usually offer some good trades when you go to a lower time frame. So I think that's it on the daily time frame. So let's go to the 4-hour. I like this level up here, this one right there, but if we do get a trade to come down, this is gonna be enough, so we don't need that. That's gonna be like an enough range to make our targets for the day. So looking at the 1 hour, that looks good. To 1 p.m. and then we do have this level here and here, and so looking at this range, we've been going up from 4 p.m. today, and now it's 10 p.m. my time, right? So in Kenya that should be 9 p.m. I believe. So it's logical to see the market reverse a little bit. So even if we are bullish in the long run, we can wait for such small retracements, and because I'll be taking trades on a smaller time frame, we should be able to make something if we do get the timing right. I like this level here. I like this gap, so I'm going to mark it. We have this down candle, and then we saw the market go up. So whenever we have this signature, right, that's a nice place to mark. Sorry. So I'm gonna name that as a 1 hour order block. So just, what do I say? Just bear with me. They're just names, and you can call them whatever you want to call. But the most important thing is we see this was, so my down candles are in black and not red like how it is traditionally. So, and then the green ones are up candles. So whenever you see a down candle and then an immediate push like this, you want to note that area, because that will be somewhere the market will most likely come to retest, right? So they either retest and then keep going up, or retest. If it fails, they're going to retest it from the other side and then keep going down. An example would be like this area right here. This is the same exact thing. See how this down candle happened over there, and then the market went down and shot up. See how they came back to retest that area, and then it went up. So if price was looking like this, and then I came to the charts, then that's a level that I would have, and then see what the market will do. So when I see the market coming down, that came down so fast, then I can bet on trying to see if that's a position that could work for me. So that would be my entry right there, my stop loss, and then look for like a 1:2 or something. So it comes, takes you in, and then hit your TP right there. So that's some of the signatures that when I see, I like to mark. So that's an area. Oh, let me take this back to my time. This is an area that makes sense for the market to come back to, right? So I'm gonna mark it in case when they start coming back, I can even take a short position and ride it all the way down here and then get out, because we can easily go back or keep going down further. So I usually call it an order block. I'm sure if you check out ICT's work, that means that the big players were buying when this market was going down, because that's what they do. So when it's going down, small traders, they're selling, right? But then these big guys, I mean, that's what I hear, and it makes sense. They're buying. So what happens is the big guys who sold, whenever they see this market going up, they might still be holding, and then when it comes down, they take out their short positions and then they buy and get in sick the market, and then the market goes back up. For example, here, there's big players who sold this. So when the market is going up, then losses. So they're like, okay, when the market comes back here, we're gonna get rid of our long positions and then get long. No, we're gonna get rid of our sell positions because we're in a loss, and then we're gonna buy and shoot up. So that's kind of something good to have in mind. I think that's it. That's all I need on this level. So going back to a 30-minute time frame, there's nothing. 15, I mean, there's something, but there's always something, but there's specifically things that I'm looking for. So okay, so see how we do have this was a down candle and we shot up, so it can be the same logic that we saw here. The market can also come here and shoot up. So going to the 15 minutes, we are shooting up to this level over here. So we are too bullish. And now, see, when the market is already, going, it's already one-sided, and we came in too late, you don't want to chase it. I can tell you there's now guys who are buying. What happens, it is, I don't think that's smart. You want it to come back to some specific levels that you have marked, and then look for your setup from there. You kind of get a better value doing that. So the next thing I do is I go to the 5-minute time frame, and I like to mark. So this is where this move, I can say it began, right? But we saw this retracement going down, and then it shot up. So you want to mark that level, but on a 5-minute time frame, I like to mark these gaps, and then I'll give it a specific color so I know that that gap is on a 5-minute. When you mark up these gaps, you'll find the market likes to come back to those gaps, and there's gonna be some sort of reaction from them. Now by gaps, I mean, see how these candles, they're together. Right here you can see this candle is not touching this. That means that there was like strong momentum where the market, has, let's say, has no strength, or it has no need to come down because it's hurrying up to get to some spot. Now what happens is they like to come back to fill those gaps, and then keep on going up, right? For example, there's no gap here, so the market doesn't need to go below this gap. If it does come and closes below this gap and it doesn't show a willingness to go up, then that means that we'll probably keep on going down. So now what I'm betting right now is for us to get this level. Now let me go back to the daily time frame, and you can see that we do have this gap here, although we did go above it and below it. So we'll see what we can get from that level. Now, so what I'll be looking for today is to trade this see how we have those wicks, because this is the body, right? And then we have those sticks. So what happened is it was all green, and then the market came down, and this particular candle, that's where it closed. Now this retracement back is what I'm betting on it happening today, and I can get a trade to come down. So let's look at this particular day. Let me take it back. We only have a few minutes, and then what I'm gonna do is let me draw a box around that price action. Okay. Let's go to a smaller time frame. We already have the range. Now, so this range on a daily time frame, this is how it looks on a smaller time frame. Let's say like a 5 minute, and that particular day from 12 p.m. is right here, right there, right? So that top wick is the whole of this, but this is kind of what I'll be looking for today. So my entry is gonna be on the 1 minute time frame, and we'll see if we can get. And what I'm looking for is the market to come up and then to create like a low, like right there, and then that's gonna be my entry, right? So my stops just above where I think that's gonna be the high of the day, and then we can trade down and finish this day. And you can see that is a huge retracement, and it doesn't look like that on a daily time frame, right? Because our high trade is going in and coming out. I scout these markets because I don't know what they will do, and they tend to be so wild. So I'm not gonna stay there and you know, because I'm not one of these pros that have so much money where they can withstand losses, and then because they have so much money. Anyway, so I think that's it. So coming down on the 5 minute, I do have this indicator that shows me something that's called ranges, right? So that's the indicator, right? No, that's not it. It's this one right here. So all this does is just mark for me the previous four hour ranges, right? So this is how it will look like, and that will help me with something I call premium and discount, right? So the top part is premium. So as long as we're in this top part, I want to look for sales, and then the below part is called discount, right? So the price is cheap, I want to look for buys coming from that zone, and that has helped me to be consistent in that I'm not buying when the price is too expensive, and then I can mark like at least three hours to kind of see what the market was doing. So I can tell you in this 4 hour, this is consolidation, and then they make it look like they're going up, and then they shoot up. Whenever I see this characteristic, then I know we should be able to get some retracement to at least half of this range. So let's see. So after this, I'm done with marking my charts, and I can get rid of that indicator. You can also come and just use a regular whatever box, but this is from, you know what, let's go to Nairobi time. Change it over here. UTC +3. Awesome. So this is from 10 a.m. to 2, then 2 to 6, and 6 to 10 p.m. So now we are waiting for the 10 to 11 p.m. candle to close, and then wait, why do we have the same time? 10 to 11 p.m. 10 to 11 p.m. Okay, So you guys, it's gonna be the 11 p.m. candle. For me, it's the 12 p.m. candle. Okay, I see. So now we're waiting for the 10 to 11 to 11 p.m. candle to close, and then we'll trade that 12 p.m., which usually is the beginning of that of the retracement. Let's say if a day was just going one-sided, and I'm kind of liking that reaction already. So the next thing I do is I'll go to the 1 minute time frame, and then these boxes are just 30-minute candles. So they just showed me candles on the 30-minute time frame, and yeah, so this right here is gonna be on the 1 minute. This is 30 candles. So what I want to see is once, so right now I'm looking at the 10:30 to 11 p.m. candle, and what I'll be expecting is the market to just trade above that range and then come back inside the range. An example will be, let me show you an example. An example will be, let me add in some more ranges, and let me show you my entry trigger, how it looks like. It looks, now because we're looking for shorts, let me look for a short setup. Okay, so it's gonna be like this. It's gonna look like this only. So this is a buy, right? So the market trades below this 30-minute range, right? And then I wait for it to come back inside that range, and that's when I'm gonna buy. So like my entry signal will be at this high right there, and then 1:2 is my go-to whatever, and after that I'm done. Well, I try to be out after 1:2. So that's exactly what I'm looking for. So this range closes in about 7 minutes. So let's wait. So if they start coming down before then I just miss this opportunity. I stopped chasing price, because that's how you lose. So now, as I say, this is premium. All that means is the price is expensive, so it's a good place to sell. This is discount, the price is cheap, it's a good place to buy. So you can see if we do start coming down, once they get to this area, there's gonna be some, usually it's gonna be some resistance or just support that sends the price the other direction. So let's see what happens. This is also an occurrence where they fail to go above the high and then they start going down. So let's see how that goes. So now we just wait for our setup to form. It will look something like this. This was also legitimate actually, because we traded above this 30-minute range, which would be from 9 to 9:30 p.m. We went up and then we started trading back to this range. So once we break this low, that will be my entry, but I don't think this one I would have made money. Let me see. That would have been 1:2. No, because my TP has to be at 1:2. So this would have been a loss, or if I move my stops closer, then I would have saved myself from taking a full risk. So, sorry, did I shout? I'm betting on this thing going up and then come back inside the range. Let me make these ranges a little bit bigger. I think they're big enough. No, we're good. So I also do a little bit of inter-market analysis. No, this goes to 1 p.m. Oh, this is a 10 to 11 p.m. candle. So We'll stop trading at 12 p.m. candle. 12 p.m. right there. Maybe we can take a position from here. No, let's wait, because this can easily start going down, but I just have to see my signature. So intermarket analysis, we don't have to do it, but sometimes it's good to see, because we do have US30, US500, US100. They trade the same way. When one is moving, the others are moving. So when one starts to reverse, it kind of signals you that the others are going to do the same. As you can see, this one is now beginning to reverse, and the others are also doing the same. So yeah, we didn't get to that level. Actually, we did. This one touched it, and that's usually enough sometimes. Okay, let's just stick on this. So we are only 2 more minutes to go. This is still suspicious. That doesn't look like a reversal point for me. Otherwise, we can try. No, suspicious. I think they'll still run it. I think they'll still go up. Any questions? I think that was too much, maybe, but it's a pretty much step-by-step strategy. Super simple. Once you get your levels from the higher time frames where you think the market is likely to reverse, you go to a smaller time frame, wait for the market to get to that point, like we had already singled out this level from the weekly time frame, from the daily time frame, and you can see we are getting some response from that zone already. And I don't know why this one is going all the way to start from here, but it's all good. I want to put this to start to end at 1 p.m. at 12 a.m. Let's go back to the 1 minute. So if we don't get a trade at 12 a.m., we can wait for at 11 a.m. Nairobi time. We can wait for 11:15 or 11:30. We can still get a trade after that, but it's usually, I don't want to say low probability, but I like to get a trade at the beginning of 12 a.m. So let's see if we'll get one today. Now we are watchful of this level. Remember that I told you about, but the market, this is a down candle and then we shot up. So it's likely to come to this level and keep on going the other way. Or if they do cross it, then we can see if the market will retest this area and then keep on shooting down. And that's it. And we repeat the same thing tomorrow. Rinse and repeat. Same thing, going in, going out. Now this is like a smaller gap. They're not gonna be as effective as they are on a bigger time frame, but still good to kind of watch them. Now this range has closed. As you can see, this is now 10:30 p.m. to 11 p.m. Now this is what I would like to see typically come up and then come back inside of this range. That for me is a trigger for sell entry, right? Maybe retest, and they can trade above this level, but once they, or it can fail, but once they come down at that low is where my sell entry is going to be at. So my position is going to look something like this. At that low, that's my entry, and then my stop loss at the highest high that they'll have, and then maybe trade up to this point. And you can see that's already 4 times my risk, which is all I need for a day. Typically my 1:2 is good. That's not bad. So with a 1:2 risk to reward ratio, if you take 10 trades, let's say in a week, you lose 5, you win 5, that'll be, you'll finish the week with 5% profit. Because if you're risking 1% on the 5 trades that you lose 5%. You know, the 5 trades that you win, because you're doing a 1:2 risk to reward ratio, you make 10%. So 10 minus 5, you make 5% in a week, which is nuts, crazy, which is good enough. Okay, yeah, that is what I want to see. Keep on going up, keep on going up. Check out this level. We are in premium, right? Which is even above the premium. So this is something that, you know, called deep premium, which means price is expensive. That means it's perfect for selling. Can it still keep on going up? Yeah, and it's just gonna be a loss and whatever. You can't be afraid of losses. Losses are a must. That one I will promise you. But, and that is where actually most of your lessons will come from losses. So every loss you take is a learning opportunity. I call them building blocks. They build you up, because you go back and study, you're like, oh, this is where I made a mistake. And some are like, yeah, I did everything that I was supposed to do, but the market will do whatever it wants. But you know that at the end of the day, or at the end of the week, or at the end of the month, the strategy has an edge and will still be profitable. So I'm still waiting for us to trade above that zone and then come back inside this range. They're gonna create a low. It's nearly a sieve. It's, I don't know, like a signal. Hey guys, let's go. So that is kind of something I don't want to say I discovered, because I've had it from my mentor. His name is called ICT, but it doesn't make sense until you see it for yourself, until you make it feel like you're the one who saw it. So we have to take that range. Can they keep trading up? Yeah, and I'm not gonna chase it, because I'm not buying, because I believe that price is too expensive to buy. So I am waiting to see that signal, and let me do this. Let that come back, either we go up or it fails, and then we shoot to the downside. So let's see. That will work. Now, another thing they can also open is they can start trading and they can start going down. They'll just live without me. I don't chase price. The moment you start chasing price, you're asking for losses. You wait for the market to come to you and then you engage. So the market doesn't have to do what you expect it to do, and you have to be okay to let it go. But once it does what you're expecting it to do, you grab it by the horns. Now, I like this low right here. By what I mean by a low is, or a swing low, you do have something like that. That will be green. Background. And then we do have like another, so that's the first candle. Then we do have another one here. Let's see. And then we do have this one here. That will be something called a swing low, swing high, because we do have this is high and a high and a high low, and we are going down. We don't like that. I want to see them take out the high. I want to see this signature right here. Now, are there many ways to engage with this market? Yeah, but I'm trading what I know, right? And if I don't see what I know, then I don't engage. Otherwise, this market is super complex. So you kind of engage with it with how you know it. So now this is what I know, and that is what I'll be waiting for. I like how they're forming that trend line. I believe you've all heard about trend lines, and there's a strategy where it's called a three touch. Touches one time, second time. When it touches the third time, there are people who are gonna be buying it. But the way I know is they're usually hunted. They do work a lot actually, but price will also like to come and trade below it because there's a lot of people who are entering there. So then it feels like price knows where your stop loss. It does not. It doesn't. So I bet you there's people who bought this, and that right there has a potential of 1:3. That was good. So if you're scalping, if that's your style, if you're scalping, then you've made your money. I don't trade trend lines though, but I still like to have them to kind of get the story of what's going on. So this is what I was talking about, where you can just start going without me, and I'll just leave it alone. So if this one traded up to here, my entry would have been, there's still no entry because there's no swing low. So this is a swing high, and a swing low will look something like this, like that. Yep, still going up. That was a fake move, huh? Swing low will look something like this. That's a swing low right there. Swing high, swing low. This right here, when I'm going long, that's my entry. It's gonna be at this low over there, like that, like that. So this is so far that's we do have a swing low, and this is what I'm waiting for, right? Why can I not move all the way? That looks awesome. I like how we are trading up. That's good. So I bet you there's a lot of people now buying, thinking the market is going up, and it can still go up. But so far we've where is that thing? Let me delete. Come on. So far we've seen that signature. Now we want us to come back to the range, retest or whatever, and then see if we can keep on going down, right? We're too bullish. That is something else to note. So we're just trying to, we could be fighting a current that is too strong, but we still have to take our bets. So this is what we have done so far. This is the, I've already said the 10:30 to 11 p.m. candle. We've gone up, and I'll show you a couple of examples after this. So, and then this is the low that we have so far. So I don't like when we have a candle that has no wick. So I'd like them to trade up and kind of cover that wick. But then again, it's also good because the bottom also doesn't have a wick. What I've seen is the market will like to come to that level. See, for example, how this one has no wick. By wicks, this is what I mean. hit hit visual order center back. Yeah. Okay. I think I'm going to take that sell from there. My stop loss just okay, let's see. So I think I'm content. So let me set up my entry. So I'm gonna I only risk 1% right there. And the stop loss is that number over there. So 20.2016, and we're ready to go. So my entry is a sell stop right there. So when we trade below this level, my entry is going to be engaged. I'm risking 1% of this account. This is a demo account, right? So this is not real money. And then my typical TP is 1:2. So my TP should be somewhere there. But since I know of these levels, right, the market can come to this gap and then shoot to the upside. But let's see how that goes. I don't like how we don't have a top wick, but I like this a lot. If we do have another swing low, I'm going to take my entry like up there. But for right now, we don't have a confirmed swing low, which is this that I'm talking about here. Yeah, I want them to go and trade above that. So far, this is what, where is it? You delete. Okay. Yeah, that is even better. So this candle closes in 5 seconds. So I'm going to take my entry to up there and then make sure it's 1%. That's what I'm risking. And my stop loss goes above that high. So if we keep on going up, then there's nothing we can do. I'm only taking shots after I've done as my analysis. Now, can it keep on going up? Yeah. We have like another level. The other level we have is way up here, where a logical level I think the market can come to. So we do getting some sort of resistance from this zone, whatever that zone is. Now if we do come down, then so my stop has to be at that high, 1% risk. So our risk to reward ratio looks something like this. So 1:2. Okay, that's not bad. Let's wait and see how this goes. So my full TP, okay, we're about to be engaged. Let's see how that goes. Once it trades below this low, this position is going to be engaged. Show the risk, 1% risk. Right here you can see the details of this trade, 1% risk right there. So with this tool, I don't have to worry about I don't know, pips and all that. It does everything. It do everything for you. On MT4, there's one I use called, what is it called? Can't remember. But these tools kind of help you not to worry about all those calculation of the lot size and whatever. Once you say if the money you're risking or the percentage, it does the rest for you. Some of us, you're not so good in math. So we've now been engaged, and how I like to see my entries is once I'm engaged, I like to see it start going down immediately. Once they just come in, engage me, and then it's it starts going the other direction, then I start getting skeptical. But then again, the stop loss is right there.